Hello everyone, Maurice here. Welcome to Tanks Invest, where we're going to be talking about investing, finance, and professional development. For today's video, it's for entertainment purposes only. The stock that we'll talk about today would be NIO, ticker NIO. As you know, across the board for last week, with respect to the CPI report that came out in the mid of last week, NIO was basically trading downward for 4 days out of 5 days, from Monday all the way to Thursday, and we had like a slight rebound around like the Thursday late until like Friday. So across the board, it was like kind of a net even type of day, week so far. And as of today, NIO has been kind of trading sideways from here, but it's kind of consolidating ever since, and it's kind of giving people of a mixed signal. Are we going for more of a downturn going forward? Are we going for more of an uptrend going forward? And we've been selling off for such a long time now, so like what is it really going to be happening, right? So I'm going to go through a technical analysis to look at like what are people psychologically thinking based on just the chart that we see in front of us. Also some of the macroeconomical factors that we should be looking out for with respect to inflations, the sector rotations that we're going to be getting, the tax deal adjustments that we're going to be getting from Biden. Also with respect to just the chip shortage that we have across the the board for all the tech sectors overall. So also I'm going to give you guys my price level of resistance to look out for in case you're thinking about buying in or dollar cost averaging going down going forward. And also lastly, my price target for year end 2021 as well. So stay tuned, stick around, and let's make some money. Alright, so moving on to the technical analysis for NIO, ticker NIO, you can see that in the 5 days perspective, ever since last Monday, we're kind of consolidated sideways, right? You can see that ever since the start of the day, we kind of pumped up with an initial sell-off. You could see that there was a big whale that dumped in down to like the $32 level, and then subsequently bounced back up with a lot of both institutional investors, but also at the same time, retail investors that bought in. And then it kind of consolidated sideways, and then because of the fact that mid of this week, of last week on the 13th was the CPI report release, right? And I think based on a lot of media consensus and based on public consensus as well, on top of a lot of manipulations in the media publication perspective, it drove a lot of fear among investors that subsequently sold the stock all the way down to the $30.71 level. And it bounced back up immediately because after the report came out, people realized that CPI report was not that bad. It was just kind of neutral, to be honest. And nothing really happened with respect to NIO, right? Nothing fundamental has changed. A lot of positive progression going forward, right? With respect to expansions to Norway, with having the showroom in May, which debuted like I think a couple of days ago or like a week ago or so. And the expansions in European nations, also on top of the growth in China with respect to the delivery numbers that they have, despite obviously the chip shortage that we're experiencing, but not just for EV sector, but for the growth tech sectors overall, right? So nothing really exogenous that is hindering the business fundamental in a long-term perspective. So people immediately bought in. You could see that the volume was enormous on those days, right? And you could see that mega green spike that you saw here, both that, and that was the major institutional investors that bought in on that day. And subsequent to that, we're kind of trading sideways right now, knowing the fact that the CPI report was the major catalyst that propelled. And today, looking at today right now, look at this more of a spread out level. You can see that ever since last year we got pumped it all the way to the $67 level, sold off because of all the exogenous factors that we talked about, right? Inflation scare, monetary policy scare, sector rotations from the growth stocks to recovery and value stocks to now the tax adjustments, and also on top of that the chip shortage that we have been experiencing sold us all the way off. And you can see that right now we are forming this very strong resistance level, right? Once at this 33.97 level, twice, 3 times, 4 times, 5 times, and right now we did break that last week because of the scare of the CPI report, but that was a one-time exogenous factor that scared people away. That really doesn't really have much to do with the long-term fundamental of the stock. That it immediately got bought up. You see this red candle that was like basically people freaking out, and then green candle, institution bought in immediately and bounced it back up, right? So you can see that this is basically forming a 5 times resistance level right now. So this is basically like the Great Wall of China, basically, if that makes any sense to you, my analogy. That right now is it makes sense why on today, Monday, it's been trading sideways, right? And I think the outlook for this stock looks pretty good at the moment. Like, knowing the fact that we've been testing this so many times right now, is basically the more it tests the wall and the more it bounces off the wall, the stronger the wall builds from the catalyst that it has, right? And I think right now it's just basically on the RSI level is basically up for a rebound. MACD is actually slowly curving back up, so it's slowly coming back for recovery, which makes sense, as you can see that. So I actually see NEO to be actually coming back up and breaching that level up again and forming this level right here and then continue to go back up, right? So definitely an area to look out for, I think. But if we break down again, I think the next level that we go down to will be somewhere around like the $28 level. You know, I misspoke. Sorry, the first level is going to be around like the $30 level again, like from the $33 level that we're at right now. Knowing the fact that 30 is more like a flat number in a psychological perspective. And then if we break that $30 level, which again, it takes a huge monster truck to go through that wall, that the next level is going to be somewhere like the 27.89 right now. And I think right now, based on just how much we've sold off, you know, basically 75% of a sell-off so far, the upside risk is enormous compared to the downside risk that you get. You're basically down maybe like $3-4 per share, but upward you could be up by double or even triple from here going forward with respect to this massive growth potential that the company is growing on the global perspective. But because of all the exogenous factors that's pushing it down right now, this is the perfect time to buy. This is a God-given create opportunity for you. So don't miss this chance if I was you. Alright, so just to recap on all the numbers that we talked about, I think right now at $33 level, I think that's fair to buy, but I think, you know, a true, more realistic, based on the technical analysis right now, I think $31.50, that's a potential number that we might go down to, based on just how it's trending right now, but by then, it will basically recovery bounce back up. So right now, I think $31.50 is a fair price for us to get in. Even if you get into 33 right now as of today, knowing the fact today is kind of like a flat day as well, that's a fair number to buy if you think about that in a long-term perspective. And if we even get down to the 30, right, which I told you, 30 is basically like the Great Wall of China, aka the NEO resistance level. That $30 is not a bad price to get into. I think that's a really, really hugely discounted price. Basically buying NEO at like a 45% off type of a discount. I would totally grab this up at the rack, you know, if we ever get down there again, right? And if we ever get below, you know, if some crazy news that happens, something extremely out of the blue, exogenous publication that comes out, 28.75, that would be just like a 75% off, you know, off the stock, which has a potential to go to like someday $90 by the end of this year, $120 in 2 years, 3 years, $200 by basically in 3-4 years, which I wouldn't be shocked if that actually happens. And if you buy now around, like, if you get down to the $31.50 level, this will give you like 170% of an upside, close to 3 times your money, which is an enormous gain from here. So definitely something to look into. NEO is a huge discount at the moment. Alright, so that's it for the day with respect to the technical analysis and some of the insights and research that I've done so far. Really appreciate you guys dropping by again. You know, please kindly subscribe, hit the like button, and also hit the bell notification to watch out for my next video coming up. Stay tuned for the next video, and I really appreciate you guys for sticking by. Thank you so much. Take care. Bye.